You can hear it from Vancouver to Guadalajara, the thunderous roar of the 2026 FIFA World Cup. On the pitch, the world is shifting. Just this week, the Economic Times reported a stunning turn of events as heavyweights like Brazil and France punched their tickets to the round of 32, while unexpected underdogs like Cape Verde captured the global imagination by holding off Saudi Arabia to secure a historic knockout berth. The world is watching the drama of the pitch, but while millions have their eyes fixed on the scoreboard, the smart money has its eyes fixed on the vault and the financial markets of this week. The drama is just as intense. If you saw the raw numbers, the paper markets will tell you that precious metals had somewhat of a brutal week this week. Gold broke below the physiological $4,000 threshold. It finally climbed back out of that, but that was a big shock to many. And our friends in silver, well, they took a hard hit as well, sliding under $60 an ounce. The headline readers are panicking, but let's look at the facts. According to analytical data tracked by Gold, Silver, and Discovery Alert, the trigger wasn't a sudden lack of interest in precious metals. Oh no, it was a massive sudden repricing of the Federal Reserve's playbook. Bank of America dropped a historic bombshell forecast predicting 3 aggressive rate hikes before year-end, pushing CME FedWatch expectations for a September hike from 29% to a staggering 70% in less than 7 days. The paper markets reacted instantly, driving the US dollar index to a 13-month high. When the dollar flexes its muscle, many times paper, gold, and silver take a temporary step back. But beneath the paper surface, the physical reality tells us a completely different story. The Silver Institute confirms once again that silver is still staring down its 6th consecutive annual supply deficit, over 46 million ounces short, driven by the unstoppable appetite of the artificial intelligence data centers and green infrastructure, while Western paper traders sold, Eastern physical buyers quietly accelerated their accumulation at a discount. Which brings us to page 2, what's happening in our own backyard. For decades, the United States has watched from the sideline as foreign nations locked up the supply chains for the minerals that run the modern world. We became entirely import reliant on foreign suppliers for critical resources. You know this and I know this. But this week, the strategy shifted. As reported by Bloomberg and Mining.com, the United States Army has just executed a first-of-its-kind national security onshoring initiative. They didn't just sign standard procurement contracts. The Pentagon struck the preliminary agreements with private commercial giants, including Titan Mining Corporation, Energy X, and Realloys Inc., to do something unprecedented. They're going to build commercial critical mining processing plants directly on American military installations. Soon, the Tool Army Depot in Utah will host a rare earth separation facility, stockpiling magnets for defense tech on site. Titan Mining will purify graphite at arsenals in Arkansas or Alabama. Simultaneously, the Bureau of Ocean Energy Management announced the federal government is weighing its first ever offshore mineral mining lease in the Atlantic, exploring a massive 2,700-mile area off the coast of Virginia, rich in titanium and zirconium. We are realizing, perhaps just in time, that true sovereignty isn't just about what you print. It's about what you can pull from the earth under your own flag, which brings us to page 3. We watch the athletes sweat under the stadium lights of the World Cup, fighting for global dominance. We watch the superpowers rush to claim the rare earths and the physical silver and gold that power the high-tech future. It seems the whole world is in a frantic race to find what is rare, what is strong, and what can withstand the pressure. Which brings us, my friends, to the exchange, where we can look at these charts in real time. By the way, as we're doing that, if you would like to support this channel and go ahead and get some silver or gold, palladium, platinum, copper for yourself, one way to do that is to go to this place right here, APMEX.com. I have a link right here a QR code. It's also in the description below, and that will send you to their website in a way that tells them that I sent you there, and they'll in kind pay me for sending you. Don't have to do it, of course, but if it's something that you are already going to do, I appreciate that. You can also just like, subscribe, share this video, all the things that help the algorithm push this information out to the masses. And now we are here at the exchange. Dow Jones Industrial. These are interesting market times. They're not all moving in sync with each other, as you'll see. We ended 51876. That's 44 points down. Our all-time high was on the 16th, so about 10 days ago. Nothing too crazy happening there. It still seems to be about where it should. S&P 500, somewhat of a different story. 73.54 is where we closed. That's 3 points down there. And we are sitting at the all-time high on the 6th of this month, so almost a full month right there, as we can see. And then we have the NASDAQ, the one that is quite volatile. We have 25,297, down 60 points, all-time high as well, beginning of this month on the 2nd. A lot more violent undulations happening there. We talked earlier about the strength of the dollar and how that impacts the metals. Take a look here at the Forex race, which is the US dollar versus the yen and euro, and we are starting to see the US dollar tear apart the other two of the US major trading partners, and that is really affecting how banks, which are giant buyers of metals, are dealing with the metals on the open market. Internationally, the only things that I saw that were a little bit crazy, right here we have Germany, Israel, and Italy all down a little bit over a full percentage point. Then in Asia, we have China down 2.26, we have Hong Kong down 1.76, Japan down 4%, and South Korea down 5%, Taiwan down 3.5%. Very interesting things happening over in the Asian regions. If you know why, make sure you put that down in the comments below. All right, now let's look at our silver and gold. As you can see here, just like we talked about, not the best week. Silver ended the week at $59.67. That's 7.8% down on the week. And year to date, that means that we're down 17%, which is not the greatest of news for people who are heavily invested in this metal. It is still, however, as experts are warning, on sale. They just don't know when the time will come when it jumps up to what they believe is its true value. Do I know what that is? No, not really. But if you think you do, put it in the comments below. All right, we go to gold. Gold climbed right back up to cross the threshold of $4,000 after being at a low point of around $39.80 or somewhere in there. But it's ending at $4,087. That's 1.79% down on the week. It is down 5.69% on the year. So not the best time for metals, but that's okay. This is not necessarily a jump ship moment by any means. Thank you so much for watching, and as always, please remember to stay classy and current with the culture of currency.